Hey folks, and welcome back to the Rate Update with Dan Frio. My name is Dan Frio and I do this report every day. My goal here on the channel is basically to help you guys get through the mess when it comes to buying your first house. Okay, so I am a mortgage person. I would love to help you find that mortgage to buy that first house that you're looking for. But what we try to do is I try to explain to you guys behind the scenes what's going on, and especially we focus in on the why. Why did that happen? Why is that occurring? Why is this? So without further ado, I want to give you some information that we just came out on the wires today and the economic calendar. Here it is. We're focusing in right now on how, what I'm trying to do is trying to figure out what the housing market's going to do next year. So I watch, one of the biggest elements I watch is building permits. How many housing units are going to be basically on the market? The reason why we do that is there's a supply demand. If you ever took an economics class, everything revolves around supply demand. Okay, so we know the Federal Reserve's goal is to hinder or pull out or suck out the demand for homes, but the supply has been running rampant. Home builders are building like crazy. People put their houses on the market to try to get the maximum price they can. But now what's happening is people are starting to pull their houses off the market because they're not getting that excess money that they were looking for. And then also builders are having a ramp up. They have a lot of houses that they've finished because the supply chain got fixed. And they had a lot of cancellations because people were pre-approved at 3%, then rates went to 7% and they backed out. So there's more supply in the market than we have demand, but the demand's starting to shrink. So here's what we're seeing right now. Building permits, the last reading was 1.5 million permits were issued for new houses to be built. That the estimate for this reading for the new economic calendar that we have was for 1.485 million units to be produced or permits to be issued. That's a drawback from the 1.5. It was kind of expected. The unexpected piece was came in at 1.342 million. That's almost 200,000 less than where we were. It's over 150,000 less where we were projected. That's a big miss, guys. So what you're seeing, though, is that the supply is starting to come out of the market. Thus, that helps the crash, the non-crash, okay? Because if you have way too much supply with little demand, it's going to drive prices down to an equilibrium. But now we have people pulling their houses off the market, builders starting to build less, that's driving down the supply, and the demand's going to stay weak, as we know. But let's get to one other context that I wanted to show you guys. If we look at the piece of the puzzle, well, let's skip this for right now. This was an article posted by, let's go to the top. Forget what this article was. Bankrate.com, a trusted source for your business. So let's go down through there. They actually did an analysis recently and said, do you expect a housing crash in 2023? And the comment is right on point, and it goes basically to what we're stating as well. Despite the higher mortgage rates, home prices are still above where they were a year ago. Even if they decline 5 or 10% next year, that's not close to a crash. This person here is considering a crash, as they say right here, at 30% or more. So I haven't talked to any builders. I know friends and family that are on builders boards that aren't predicting a 30% crash. They're saying probably 10 or 15. And right here, he's explaining though the whys. He believes the housing shortage will continue this year with the supply balancing out over 5 years. He explains a crash cannot happen unless you have oversupply. Way too many homes in the market than buyers. So we're starting to see the equilibrium come back down. Builders were building like crazy. People were putting on their houses on the market like crazy. Now all that's starting to come back down, which is helping because mortgage demand's coming down. So I'm not expecting a crash. Most analysts aren't expecting a crash. But let's see, have we seen the crash yet in the US? Like a lot of people have said that we're going to have in 2021, last year, in 2022, this year. What are the real numbers? So what you're seeing on your screen right now is a list, and this, you can find this. This is public information, and this is live as we're speaking. So go to Zillow. You're going to go to Zillow.com, and you might say, oh, Dan, that Zillow isn't a trusted source or whatever. Guys, I have to find my data somewhere. So you're going to go there, and you're going to go down, and you're going to hit research, and then you're going to hit data. So let me walk this through you. So we're going to hit research. When you're going to the data, let me just start all over for you. You're at Zillow. You're going to go down through here, and I'm going to teach you how to do this thing. And then you're going to go to research. You click that. And then you're going to go to data. You're going to click that. And what's going to come up is this data right here. So what we want to focus in on is right here. Okay, these are what house prices have done in 2022. So let me get my head out of the equation real quick so you can see the full screen. Look, we saw Miami in 2022 still up 22%. Okay, that's just this year alone. You can go all the way through here. Look at all these homes that are priced higher than where we were just last year. So the crash isn't here yet that a lot of people predicted. Is it going to take effect? I'm still the proponent that I say no. All right. So that being said, let's get over to some other content. Another piece of the equation, I know I'm all over the board today, but we focus in on this channel also on inflation. So inflation numbers are running rampant, but I want to pull out a lot of the context or a lot of the pieces of the inflation number so you guys can get it, how I think inflation is going to dramatically drop because of certain elements. So the reason it prompted me to do this is on my way to work this morning, I stopped and got gas, and gas was $2.99. Now, just 2 months ago, gas in Chicago was $6. So we're half the price of where we were just 60, 90 days ago. Okay, so we're seeing oil crash. And here's, I won't say crash, but we're seeing oil take a really big pullback. I'm going to get my head out of the equation again. Here's where oil is. Let's get on here's what's going to surprise you. Let's year to date. What's going on with the oil prices? Well, we saw right through here, like most things, between March and June, that's when everything basically peaked. So we had March here, we had oil at, where were we? 80, I put my glasses, I can't really see that. We got oil at $120 a barrel, or right in there. We had in June, $121 a barrel. Where are we now? 75? Okay, a substantial drop there. Lumber prices. Let's go over to lumber prices. Here's where lumber prices were. Let's look back in March. Lumber prices, and I figured out how they rate this is per ounce, believe it or not. So lumber prices back at the earlier part of the year were $1,418 an ounce. What is it now? 60. It's a 65% reduction, and now we're at $397. Okay. That's one other piece. Poultry. I was shocked that poultry is the #1 inflation piece of this puzzle as well. Well, we saw poultry spiking and spiking and spiking, and then it dipped, and now we're back and we flatlined at 7.9. So what I'm trying to explain to you is there's a lot of elements that are taking effect that have lagging results of what the Federal Reserve is doing. So the Federal Reserve is actually robustly increasing rates to slow down inflation. What is inflation? Well, the cost of goods going up. What causes cost of goods going up? Well, economics 101 again. Either you have low supply with equal or higher demand. That's what happens in most cases. And that is starting to get pulled out of the system right now. We're seeing that in housing that I just explained. We saw that in oil. Oil prices are quite substantially lower than they were. Lumber prices are down 65% from where they were. Chicken's starting to flatline, and we're also seeing indications that rentals or rent prices have flip-flopped, and now they're on a downward trajectory. So with all those, my expectations is the inflation is going to resolve itself, and there's going to be a lot of runoff on data as well. So mid-year, we're going to start seeing, a lot of some things or most things coming back in line, and then the Federal Reserve is going to put everything on hold. And don't be surprised, because 98% of CEOs right now are saying there's going to be a recession. Also, when we see a recession, in most cases, check out some of my other videos, mortgage rates drop over 1.8%. The last 5 recessions that we've had, mortgage rates on average dropped 1.8%. That being said, where are we right now? So what we focus here on is what's going on with the mortgage bonds that are trading on Wall Street. So the effect here, what you're seeing on your screen, you're like, Dan, that doesn't look like an interest rate. Well, it's not. What you're seeing on your screen is the mortgage bond price. Okay, all that you need to know on this is if this price goes down, your mortgage rate's going to go up. The bigger this number is negative, the bigger the increase in the rate going up. Same thing the other way. If the price of this bond goes up, mortgage rates are going to go down. Well, you can see by the chart that we've been on basically a downward trend all year up until just the last couple weeks in December, where mortgage rates took a turn. So let me just go over where mortgage rates are. Just a month ago in November, mortgage rates hit 7.37. You can see right here. We are now at 6.38. So we are 1 full percent lower than where we were last month. Why? Because of everything that I've been telling you. Inflation is going to start to cure itself, and it will take time, and the Federal Reserve is doing everything they can and much, much more. Housing market is going to stabilize, so be calm. It will correct itself. Just give it a little bit of time. But what I want you to take out of this is everything's going to be okay. The housing market will come back down in line. Is there going to be a crash? I'm still not saying there's a crash, and I'm not on that bandwagon. I think mortgage rates will stabilize and start to come down and ease, bringing home affordability in that area down. And so we're going to see house prices maybe take a 10% correction across the board in most areas. Some areas are going to be hit a little bit more. Some areas might not even get hit. So be patient. Make sure you consult with a good realtor, a good financial person like ourselves if you're looking for a mortgage. And if you are, all you need to do is go to therateupdate.com, and here's all our information. You give us a call, you can book a meeting, you can even apply online. So any which way you want to do it. My name is Dan Frio. I do this video every day to make sure you're an informed consumer when it comes to buying a house. So if you like my videos, you find educational value in them and entertainment value, please, all I ask you to do is give us a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. Thanks so much for watching. God bless. See you tomorrow. Bye-bye.